From setbacks to
Setups.
setups.
Yes,
Set.
from setbacks to setups. Okay, how many of you have faced setbacks? Everyone, right? All of us have faced setbacks in one aspect or the other of our lives. When you have a setback, what is the most important thing?
Exit. Don't cling on to.
Exit, yeah, okay.
Bounce back. We have a plan to bounce back from your setback.
Don't lose the conviction on your process.
Try to
Anything else?
understand what is the error you have, why the setback happened, what was the error that you did.
What about accepting that setback happened because of certain reasons? Before even analyzing, finding out, the first thing to come out of any setback is to accept that the setback has happened. A lot of us are always in a denial mode. We say that, nahi, ho nahi sakta ye, mere saath to ho nahi sakta. So the first step to come out of any setback or even finding the setup for bouncing back, the first step is to accept that yes, the setback has happened. Tell yourself that yes, it has happened. So when you accept it, then what happens is you will be in a position to start thinking about how you can get out of this or bounce back from this setback.
It's like unless we accept that there is a problem, we cannot think about solving it in the first place.
Exactly.
So it's like
Absolutely. That is the point what I was trying to make. Today's topic is all about turning setbacks into setups. And and I'm talking in terms of investing and trading, but yes, you can also generalize this to other aspects of life as well. First step is to recognize that experience. Once we recognize the experience, what happens is these things. Think of it as a feedback, not as a failure, a personal failure on your part. Second one is separate the emotions from the facts. Ask yourself this: was it actually a bad opportunity or was it just a bad outcome? The third thing is you have to, any outcome, you should associate and you should try to pinpoint what was the emotion attached to that. And those emotions are generally, I can't go wrong, I'm always right. Try to see if those emotions are recurring. Okay, so figure out, try to pinpoint that. That is the first step. Step 2 is always, as usual, analysis. Now, this is the thing where we start getting deeper. We'll start going into finding the root cause. Anything which can be measured can be improved. So if you want to improve, let it be anything. You need to measure it first. And in our, in finances and in trade and investing and all, it is about journaling and recording our trades. Okay, review it for what was the issue, whether the entry was the issue, whether you exited it early or you exited too late, whether, if it hit your stop loss, what was the reason why it did hit your stop loss, and reason with it in a very, very open mind. Don't go with a, preconceived notion that, oh, okay, every time I keep my stop losses very close by, that is why it is hitting. If you feel that also, try to go and find out, is it in fact you are keeping it very close? Ask yourself these 3 questions. Did I follow the rules? The rules which we have set. Did I act on impulse or did I follow the system? Was it because of the condition in the market or was it because of my decision? Why I say, was it because of the market condition or my decision is because, see, there are certain times when markets can act a little funny, I'll say. Okay, I'll not say unpredictable. It can act funny. Okay, so you can't always blame that, okay, it is because of your mistake. Okay, in sometimes because of volatility, it happens. You should find out whether it was actually the problem with your execution or the market behaved, erratically. So the best solution for that is when you know that market will behave erratically, stay away. Now, when will the market behave erratically? When there is some important policy decisions coming out, like, RBI policy, the budget, or some important announcement, from the government, something which affects a certain, the markets. Okay. So stay away from that. And staying away means for those, small window of time till the price settles because of that, whatever news-based thing. So just stay away. That is the solution. Okay. So try to look for patterns over multiple trades. Don't jump to conclusion after just one wrong trade. Don't look at, don't jump to your conclusions, or don't get into the mode of, refining or tinkering with your system just because of one wrong trade. Never do that. People who jump from one approach to the other, thinking that, okay, it will give them consistency, they are actually very wrong. It's not about the strategy. It is something more deeper. Okay. It has got to do with us. It's got nothing to do with the strategy. Look at it, whether it is repeating for at least 4 or 5 trades. Look at it from that angle. Okay. Always have a broader view. Again, the system. Now, system is what? After you do the analysis, you will have to build the bridge back. Okay. Now, how do you build the bridge back? Whatever are the learnings from your mistakes, convert it into the rules or checklists for your system. Like, for example, I never go opposite to the trend. I told you this example that as per my own experiences, whatever trades I have taken in the last 7 to 8 years, I have found out that 95% when I was wrong, I was in the opposite side. So what did I do? How did I build the bridge? I put that as part of my rule. I will never enter a trade which is opposite to the trend. Now it has become a part of my system. So I never take a trade in the opposite direction at all. Even if I am seeing that, okay, there might be something and all that, I don't even look at it. Okay? So this is the way where you have to find, convert your findings or convert your learnings into your rules or checklists. Setbacks happens. The best thing what you can do is you can go and look at your position size, or you can, maybe you are keeping your stop loss too close, or you're keeping it too far away. Okay, both are wrong actually, because both will result in, it will affect your risk to reward ratio. So please be very mindful. It is very clear. 1:2 risk reward ratio. Now 1:2 risk reward ratio when we begin. Okay, the intention is what? To protect the capital. When that is the intention, 1:2 risk reward is perfectly fine. As you get consistent, as you get confidence on your own systems, your own methodologies, your own rules of way of doing things, then you can slowly increase your risk to reward. From 1:2, increase it to 1:3 or 1:4, depending on whatever you're doing. Okay, so it should be a gradual progression. Never go suddenly. Always see, I also always follow this thing. I don't meddle with anything what I'm doing. I give it at least 3 months time. Like for example, abhi kuch ho raha hai, suddenly something goes wrong. I immediately don't rush back and okay, I'll change something. Because I know that my system is working. Why should I tinker with it just because there was one bad outcome? If it repeats again and again, then yes, it makes sense to go back, revisit, go to the drawing board and revisit and find out what is the problem and rectify it. Makes sense, right? Don't do it just because, okay, one stop loss hit it. Okay, let me go back. I'll again go and see, oh, okay, what is my entry rules? How is my, stop losses? How do I define my risk reward ratio? Don't do all that. Let me tell you, it has been last 2 years. I have not even changed anything in my system. Before that, yes, because I was building it. Now I don't think so. I need to kind of make some big changes. I don't do it. So this has happened because of this weekly and the monthly reviews. Now, step 4 is of course continuous improvement. As you all know, if we need to kind of keep on improving, how can we do continuous improvement? Is by sharing it with like-minded people. Learn from each other. Bounce off your ideas or bounce off your things, what you're doing, because you might get some insight which you might have overlooked. Make sure that whatever mistakes you make sure that you learn from it and you don't repeat the same mistake again. That should be the intention. I'm not saying that it's not that it's very highly improbable that you'll not commit the same mistake again. Yes, you might commit, but having that intention that I will not commit this mistake, I will slightly improve it next time. That should be the approach. And always have this thing that, okay, I will improve. Like, for example, I was sharing it with Aditya the other day. Don't suddenly say that, okay, I want to have 5% or 10% return in a month. Increase it gradually so that you keep your, what you can say, you push yourself in the way you can sustain it. According to me, the biggest progress is to maintain consistency. It's not about, okay, how much you are achieving or how much returns you are making or how many trades you are taking or what investments you have made. It's not about that. It is about consistency. Like what Swati was sharing, it is about consistent, especially for investors. Again, monthly consistent investing is the way to grow your wealth. For traders, it is about maintaining good risk reward ratio and improving your accuracy, the win rates. If you like, for example, if you have a 1:2 risk reward, even if you are accurate by 50%, you will end up profitable, right? Mathematically, that is what happens. If you increase the risk reward to 1:3, even 40% accuracy rate, you will end up profitable, right? So the goal should be on getting your accuracy rate. It is not about what is the final outcome. So please maintain this, and I don't think you will go wrong anywhere. And the final big idea or message I want to give to all our community members is loss is only permanent if you refuse to learn from it. Otherwise it is just a fee you are paying for your trading and investing success. And one more thing, what I want to tell with all of you is, please remember this. A loss or a profit is not yours unless you book it. वो उधर P&L में ऊपर नीचे green red दिखा रहा है, but actually it is only notional. Unless and until you book your profit or your loss, neither the profit nor the loss is yours. So this is the biggest takeaway what I can give you. So please, losses will be part of the journey, but make sure that those losses are as small as possible and your profits are as big as possible. That should be the ultimate goal. Okay, it's not possible that you will never have loss. No, possibly nahi hai. There will be, but how small that loss is in your hands and how big the profit is also in your hands.